All right, we're going to kick things off. Welcome everybody to our first PropTech with NAR Meetup of 2021. Want to do a few introductions real quick. I am Dan Weissman, Director of Emerging Tech with NAR. Been with NAR for a few years now, and background is actually in construction tech, and worked my way over and have been focusing on real estate tech and prop tech in general, doing research and understanding technology trends in the industry for the past couple of years at NAR with Dave. Dave, you want to introduce yourself?
Sure, thanks, Dan. Hello, everyone. My name is Dave Conroy. Thanks, everyone, again, for joining us today. I've spent the last 10 plus years in technical roles in real estate. I've worked at associations, research labs. I have also led engineering at startups, and I've also spent a lot of time assisting tech teams for other real estate startups through the work that I've done with our real estate accelerator, Reach. I'm passionate about open source technology, software engineering, and networking. And I must say, I do miss doing these in person, but I am enjoying being able to team up here with Dan to provide some great content for those who are interested in PropTech.
Cool. Thanks. So before we get started, Dave's going to go over the agenda in a minute and do some quick intros, but we wanted to talk about this meetup in general. Hopefully some of you remember right before the pandemic, I had started PropTech Chicago meetup. We snuck in our first meeting in February of last year. Dave had started PropTech New York. He had snuck in one meeting and had the second one planned up. And then of course the pandemic hit, so we put everything on hold. As we kind of let things settle down a bit, we started looking at, how to get this going again. We think it's really important to do this, and it's a great way to network and learn from each other. And so we decided to take our two groups, merge them together, and rebrand it to call it PropTech with the National Association of Realtors. So like the concept behind the groups haven't changed. We just put them together, where our goals are really still to bring folks together who are interested in learning and talking about PropTech. Hopefully networking. We're going to try to do our best until we can get back in person. We're stuck with good old Zoom. Also excited, we want to make sure that we get the best speakers and panelists on here. And I think you'll see that reflected in our session today, kicking off 2021. And then of course, ultimately, we want to create a community of everyone who wants to talk about PropTech. So our plan is to have a meeting every other month. Of course, we're going to stick with this virtual concept for now. When we're able to go back in person, we're going to kind of make this a traveling roadshow to some degree and try to have in-person meetings based on where there are PropTech focused conferences happening with a virtual component too. So that if you're not comfortable traveling or you can't travel because you don't have to, you can't be at that conference, we're still going to make sure that we make this as inclusive as possible. So we're excited about that and hopefully getting back in person soon. Lastly, we got a great URL, meetup.com/PropTech. So if you want to get in touch with us, you can message us through there, or Dave and I are both very active on LinkedIn, and we'll provide those links at the end. So with that said, I am going to hand things over to Dave for quick agenda and intros.
Well, thanks, Dan. Appreciate that explainer and setting the stage for us here today. So let's take a quick look at what we're going to cover today. Next slide, Dan. So first, we're going to have a presentation on the recent mergers and acquisition activity in real estate by Chris Go of GCA Capital. That presentation will be followed immediately by a panel who will be giving us their expert opinions on the PropTech investment forecast for 2021. Now, that panel will include Glenn Shimkus, who's NAR's VP of Strategy and Innovation, Momay Q, Senior Vice President of PSP Growth, Lynette Kiowski, Managing Partner of Reach Canada, Zach Schwarzman, General Partner of Metaprop Ventures, as well as our first speaker today, Chris Go. So without further ado, I'm actually especially excited now to introduce this upcoming presentation because having seen Chris speak at previous IOI summits, his talks are always crowd favorites, and his analysis is always really spot on. So Chris, would you like to take it away?
Great. Thanks, Dave. Thanks, folks. Thanks for having me on here today. Really excited to be here to talk about the PropTech ecosystem and what we're seeing from an investment and M&A perspective in the market. And if folks are looking at the Zoom, they should be able to see my slides that I just popped up here. So as Dave mentioned, my name is Chris Goff. I'm a managing director at GCA Global. We are a global investment bank focused on the technology sector. So we've got about 500 professionals globally who work on M&A and capital raising technology transactions across the spectrum of technology. So digital media, software, semiconductors, business services that are tech enabled. I spend all of my time, though, in the property technology space, and we've been one of the most active advisors in the market over the past 5 or so years. So 100% of my time is dedicated to what we define as PropTech, which is a pretty broad umbrella: commercial, residential, multifamily, construction technology, data businesses that underpin those segments of the market are all in this umbrella of property technology that, as many people have seen, is just experiencing a tremendous amount of tailwinds from a capital raising perspective and from an M&A perspective. There's different constituents within the ecosystem are starting to adopt technology, which had previously been fairly nascent, to drive efficiency, to drive productivity, to drive connectivity across whatever segment that they're focused on. We've been involved, just to sort of credentialize myself a little bit further, we've been involved in a number of kind of high profile transactions in the residential real estate space in particular. So we sold market leader to Trulia, we sold Commissions Inc. to Fidelity National Financial, Dotloop to Zillow, Inside Real Estate to Level Minic, and the list goes on. But over 25 transactions in the PropTech ecosystem globally for GCA over the past 3.5 years. So very active in the market. You know, one of the things that makes us so excited about the market is just the continued momentum that's built over the past several years. So 2020 was another strong year for investment and M&A activity in the real estate market. Almost $7.3 billion of equity invested into the segment in the U.S. alone in PropTech. That's shy of what we saw in 2019, a little bit down year over year, but on a relative basis, if you look back over the past 4 or 5 years, 7.3 billion is just a tremendous amount of capital that's come into the space. And it's really been distributed across a broad section of companies in the market. As I mentioned, a lot of activity in the residential market, particularly in the mortgage space, especially oriented around businesses that are trying to tie together the digital consumer experience from transaction initiation all the way through closing. And so you've seen a tremendous amount of dollars go into companies like Notarize and Qualia and others who are sort of attacking that downstream transaction-oriented ecosystem of TAM that exists around the real estate transaction itself. One of the trends we've seen with the capital coming into the space is that the increase in larger capital raises across the spectrum. And so what that typically signals to us is the maturation of a market where you're seeing companies not just raise early stage Series A or seed money, but they're raising $20 million plus rounds, or in this instance, we saw almost 30 deals of $50 million of equity in the PropTech market in 2020. Again, sort of further signaling that we are starting to see some emerging leaders in the space become larger businesses, become acquirers and consolidators themselves, and sort of the trend amongst the VCs to continue to back established category leaders. On the M&A side, volume remained pretty consistent with what we've seen over the past couple of years, about 100 PropTech M&A deals in the US, which is similar to what we saw in 2019 and 2018. But we did see a number of larger transactions in the PropTech market in 2020. So ICE acquiring Ellie Mae for close to $11 billion in enterprise value, the Black Knight Optimal Blue deal, which was $1.8 billion, approximately in enterprise value, the recent Thoma Bravo acquisition of RealPage, north of $10 billion. And then obviously the CoStar HomeSnap deal, not quite as large from a size perspective, but a very important strategic deal for CoStar, making their first foray into the residential real estate market. And so the activity level consistent, but the size of deals seemingly moving up. And then we're seeing broader pools of buyers enter the market, which is obviously a positive for the entire ecosystem. When you look across the spectrum of who now is paying attention to the property technology market on the acquisition side, you're starting to see some new entrants like CoStar and ICE come into the space, which is very encouraging. And one of the themes, if you've been paying attention to the capital markets over the past 6 or so months, you've probably heard the word SPAC thrown around a lot, special purpose acquisition companies. And SPACs are another one of the drivers of some of the activity that we saw, particularly in the back half of 2020 in the PropTech market. These are blind pools of capital that raise money and go out and then try to find a merger partner to merge with and then become a public entity. And so you saw Open Door obviously merged with a SPAC. Porch is now publicly traded company after having merged with a SPAC. There are a number of property technology focused SPACs that continue to be on the hunt for typically larger companies that need to be kind of several hundred million, if not north of $1 billion of enterprise value businesses in order for them to be public and successful as a SPAC. But it's another pool of capital out there that will drive continued activity and interest in the space. And again, you saw Porch go public, and after they went public via the SPAC merger, they went out and announced a few acquisitions post their public listing. And so these SPACs are helping to create incremental pools of capital for the buyer universe to go out and roll up some of the smaller businesses in the market. And then also a number of successful IPOs in the space in 2020 as well: Airbnb, Rocket, Lemonade, Compass is obviously filed. So the health of the overall capital markets has enabled the continued success of some of these public companies that will, again, keep driving M&A and capital raising activity. So it's sort of an ecosystem that fuels itself to a degree. In terms of subsector trends that we're seeing, I talked a little bit about this on the first page, but within residential, we continue to see very low interest rate environment, tight inventory, as folks on this phone call know. Prices are remaining pretty stable, if not slightly increasing. And so we think that the market for residential real estate technology will continue to remain healthy, especially given some incremental stimulus and what we expect to see some increasing transaction activity in 2021 as the market kind of recovers from some COVID lows. In terms of where dollars are moving in the space, there is this concept of unifying the transaction. So taking the initiation of a listing agreement or relationship, or even prior to that with the initiation of a consumer search activity, and then being able to capture multiple points of monetization with that consumer throughout the transaction. So thinking about not just the broker agent commission that's earned by probably a lot of folks on this phone at the time of the transaction, but also thinking about how to attach things like mortgage and title and insurance and moving services around the consumer experience with technology to drive incremental monetization for that technology or service provider. And so when you look at companies like Lone Wolf, who has the marketplace that I alluded to earlier, or like Qualia, Notarize, States Title, Updater, these are businesses that are all trying to capture some of those incremental dollars and enable a more streamlined consumer experience. And it's a big focus of the investor community now, because the TAM for the real estate transaction commission is large, but there are also, as folks know, some very large TAMs directly adjacent to the transaction in those buckets like mortgage and title and insurance that also can be captured. Obviously, the low rate environment is driving a tremendous amount of refinancing activity in the mortgage side of the house right now. And so we've seen, whether it's direct to consumer brands like Better.com or mortgage enablement businesses that are more technology oriented like Blend or SimpleNexus, raise significant amounts of capital on the back of a very healthy kind of mortgage origination refinancing market. So that's a trend that we expect to continue to see. And then interestingly, brokerages have been one of the best performing segments in the public market over the last 12 months, and in particular in 2020. So you see Redfin's up over 200% in 2020, Realogy's up nicely, EXP's up over 400%. And one of the things that's happening as we look at the market, particularly with companies like Renfit, is they are starting to integrate and attach these incremental services around the transaction that I was alluding to at the top of the page. So their attach rates for mortgage, their attach rates for title are fairly significant. And so they're increasing the monetization and efficiency of the transaction economic event that they're experiencing around each of the deals that they're doing. And so that's one of the things that's been driving momentum in their businesses. On the commercial side, it's been a little bit more of a mixed bag depending on what segment the asset sits in. So obviously hospitality, given COVID, has been very challenged and remains challenged in 2020 and into 2021. Commercial office, similarly, there's a lot of uncertainty about when the recovery will start to take place in that segment and what the recovery will start to look like. But multifamily industrial assets have held up well. And I think you're also seeing the evolution of technology tools designed to enable kind of a back to work environment, back to work tech in a post-COVID world that will enhance not just the profitability of the building operations, but also the safety of the inhabitants or the folks inside of the building. So Aquacore, iLobby, Aircuity, which focuses on air quality management inside of buildings. These are the types of technology solutions that have been raising capital and getting attention in 2020 as people think about what it will look like to go back to work and what in a safe environment in a go back to work world is going to look like post-COVID. On the multifamily side, that asset class has held up nicely in COVID times, given some of the government stimulus programs that have been put in place and just the general kind of slow economic recovery overall. But you're also seeing a host of technologies that are designed to enhance tenant experience. Certainly, as we all are sitting in our condos or houses more often these days, you want to make sure that there are amenities around the building that operators and owners can offer to their tenants to enhance the experience. And so Butterfly MX, Zigo, Alfred are all those types of tools that are being delivered into that ecosystem to help improve tenant experience, retention, and monetization at the building operator and owner level. So you see here, I talked about $7.3 billion in capital going into the space in 2020. This is U.S. PropTech equity investment. That is, as I mentioned, slightly down over 2019, but overall, very significant investment dollars in the market on a relative basis. Q2, interestingly, which was sort of the heart of COVID, was one of the larger quarters from a dollars into the market perspective. There was a big capital raise in that time period. Airbnb was a significant amount of that, $3.9 billion. But again, pretty balanced throughout the year, with Q4 being another strong quarter in terms of investment dollars, building momentum here into Q1 of 2021. You see on the left side of this page, 58 deals north of 20 million in investment. That's what I was alluding to earlier, just the continued kind of scale leader creation in the space across the spectrum. And then some of the larger deals here on the right, really diversified in terms of end market. So you see Katera in the construction space, you see Better in the mortgage space, you see Procore, another construction business, Hippo in the insurance category. So very broad mix of businesses getting large funding rounds in the market here in 2020. Again, reflects the opportunity, I think, that exists from a TAM perspective across all of these subcategories. You know, this is an interesting chart. You know, so this is sort of an eye chart if you're looking at it on the page, but this is really a segmentation of different investment rounds across amounts of capital that folks have raised. You know, what's interesting to me is there's 160 companies now in the PropTech space that have raised over $25 million. Tremendous amount of companies in our ecosystem that have raised a pretty significant amount of capital. So when you look over at the upper right-hand side of the page, you see the 2020 IPO SPACs. Again, these will all be future buyers of these smaller businesses. And so it's really encouraging for us to see larger companies get liquidity in addition to these smaller companies getting funding, because ultimately these smaller companies all will need exits themselves, and we need as many large, well-funded acquirers as possible in the space. As I mentioned, about 100 deals, 102 deals on the M&A side in 2020. 71% of those were strategic acquirers. So continued majority of transaction activity being driven by strategics, but we are seeing a healthy amount of private equity players in this market using these assets as platforms to build around. So you think about the Stone Point Lone Wolf deal that I mentioned previously, the Bain Capital Builder Trend deal in the construction space, Thoma Bravo acquiring RealPage. Those are all three examples of private equity firms buying new platforms to build around and use M&A as a tactic around that platform asset to continue to create value. We expect private equity to play an increasingly important role in this market going forward, especially as some of those logos on the prior page continue to mature, drive profitability, and then become platform acquisition candidates themselves. I'm going to move somewhat quickly because I know I'm running up against my time here, but the market overall performed well in 2020. The NASDAQ, as I mentioned on one of my prior pages, was up 44% for the year. We had a number of categories, particularly the portals, the brokerage businesses, the property management software businesses outperform the NASDAQ, as well as the real estate data and software businesses perform very strongly. At the lower end of the performance spectrum, perhaps not surprisingly, given my commentary around the commercial space, the commercial brokerage market had a pretty challenging year, just given the decline in overall investment in the commercial real estate ecosystem. Multiples remain very healthy, especially for businesses that have strong recurring revenue businesses with sort of software-oriented models or software margin profiles. And so you look at these two charts. The upper left chart is enterprise value to 2021 revenue. The upper right chart is enterprise value over 2021 EBITDA. Those are two frequently referenced multiples, multiple categories that people use to benchmark relative valuation of companies in a market. And you see the portals are trading at almost over 17 times revenue and almost 30 times EBITDA. So very strong valuations on portal businesses, followed by property management software and broader data. These are all businesses that have characteristics with very strong gross margin profiles, and in particular with the property management software and data businesses, they're very sticky businesses. And so the retention rates are very high, which leads to strong visibility into go forward results. And so just a picture here of how companies trade based on business models and sort of performance overall. And then finally, I mentioned the SPACs. So a number of SPACs out there. 2020 was a record year for SPAC IPOs, over $83 billion of capital raised by SPACs in 2020. There are a number of PropTech oriented SPACs that are currently on the hunt for different merger partner candidates. Again, these tend to typically be slightly larger transactions. These aren't sort of tuck-in deals that you see strategic acquirers doing in the space. These are large platform deals that are meant to be kind of typically north of $1 billion plus type transactions to be public companies. But we expect these SPACs to continue to merge with PropTech businesses, given the investor demand and appetite for the PropTech market. And this, again, will be a source of continued activity, as well as the creation of potential acquirers for smaller businesses down the road. So in terms of 2021, we expect continued strong activity that's already been evidenced by some of the investment activity we've seen just in the last few weeks. Increased number of public companies with capital to go out and buy smaller businesses, increase in PE activity. And we think really the digitization process is still in the early innings here in terms of the adoption of residential real estate. Residential and multifamily are, in our view, slightly ahead of others in terms of where their adoption curve is relative to categories like construction, for example, or industrial, for example. But to us, that creates what is a really exciting opportunity for early stage companies to get into those markets and create a lot of value as they grow, as well as to have residential players and multifamily players continue to expand via M&A and adding new features and functionality through acquisitions. So with that, maybe I'll pause and turn it back to Dave and Dan and get into the next phase of the conversation.
Cool. Thanks, Chris. We did have one question come up from Deborah Schwartz that we could maybe hit quickly before we jump into the panel. Her question is, While we see Qualia streamlining the closing process, it seems that integrations with other aspects of the transaction are not as robust as in enterprise solutions outside the industry. And that acquisitions of related services create a lot of expense and time to complete integrations. Are you seeing any trends towards standards that provide for better integrations?
In terms of creating standards for integrations between business partners, I guess the hard question for me to answer is sort of an operator, and excuse me, a non-operator, but we have not seen any sort of formal standards beyond what I would consider to be kind of government regulation standards around things like RESPA. We haven't seen any formal sort of framework for business partnerships integrations. Those are typically negotiated on kind of a bespoke basis between partners.
Okay, great. Thanks, Chris. Glenn, would you like to take it away?
I would, thank you. So again, Chris, great information as always. Every time I know I'm going to be listening to you, I have my pen and paper handy because I got to feverishly write down all this information. So we'll kind of move on to the next part of the agenda here, and that is a panel discussion. We're going to be focused on kind of the investment forecast for 2021. I'm pleased to have a really terrific panel joining me for this part of the conversation. And just to give you a little background on myself, I'm VP of Strategy and Innovation for National Association of Realtors. I've spent my entire career in tech and most of it as an entrepreneur, having sold my last company, Car2B, to DocuSign, and then helping DocuSign grow. Joined NAR about 2 years ago, and really focused on innovation in our industry. And I have with me a wonderful group to continue the conversation that Chris just started to talk about 2021. And so if we could, if each of you could introduce yourselves, talk a little bit about your firm and a little bit about your background. Maybe Lynette, you could kick us off.
Sure, sounds great. Thanks so much, Glenn. And thanks again to Dave and Dan for having us today. Great session. So I'm Lynette Kiowski. I'm the managing partner for Reach Canada. I lead the Canadian expansion of Second Century Venture, which is NAR's venture capital arm of their growth program, Reach. So been extremely lucky to be leading that initiative since about a year ago now. So just before the pandemic was when NAR announced our program up here in Canada as part of that global expansion. My background is in the real estate industry. I come from the association executive world, so have been around the space for about, I don't know, 10, 12 years, something like that, and happy to be on the tech side now.
Excellent. And Momay, if you could go next.
Sure. Hello, everyone. I'm Momay Q. I'm an SVP at PSP Growth. So I lead venture and growth investments for PSP, which is all of Penny Pritzker's private investments. So we focus broadly on B2B software, but we have a very proactive approach in software verticals where we have either a family history or a unique value add, and PropTech certainly falls into that. So as some of you may know, Penny and the Pritzker family are well known in the real estate space with decades of experience. We currently still have a real estate arm that invests in multifamily as well as industrial properties. So in some ways we can act as both a strategic as well as a financial investor. My background is I've spent the last 12 years in the venture growth equity space across a few different venture firms, but mostly all focusing on B2B software. And seeing some of the transformations that a few of the industry verticals have gone through. And it's interesting now to see this evolution in PropTech and the exciting inflection point that we're at today.
Excellent. And last but not least, Zach, if you could introduce yourself.
Happy to. Well, I'll echo the pleasure to be with everyone. My name is Zach Schwarzman. I'm a general partner at Metaprop. We're early stage venture capital firm. We're sector specialists, so everything that we invest in is going to be technology focused on the real estate industry in one way, shape, or form. We can talk about what that looks like a little more as we go. But within our little corner of the universe, we've become the most active investor by a pretty healthy margin. And across individual track records and then investing together as a firm, we've now invested in about 130 early stage companies broadly defined in the PropTech space.
Wow, that's not a small number. So let's set the stage a little bit here. So Chris, we've got your background in the kind of the M&A space and all the work that GCA has done, and is, I think, understatement of the leader and very active in the space. There's been no question about that. But Monet, Zach, and Lynette, if you could kind of set the stage for everyone, give us a little piece of like, what do you look for? Like, what's the typical size where you guys invest? About what, how much is raised at that stage? What's the focus you're looking for? Just so as we continue going through this discussion, people have an understanding of kind of the lens you're using as you look at the investment community. Monet, would you kick us off on that?
Sure, happy to. So in terms of where we focus, we typically invest, I would say, in late venture / growth equity. And the reason for that is where we think we have the most value add. So on the PSP platform, in addition to venture and growth, where we focus on, as I mentioned, we also have a real estate arm. In addition, we have a private equity arm, and we have a big international focus in a lot of the, either our network or some of the initiatives that we do. So when companies are always hyper scaling, but when companies are at a certain level of revenue, say around 15 to 20 million of revenue, they start thinking about next step in terms of how to become a more lasting enterprise as opposed to just getting the next customer. And so that's where we find we can be the most helpful partners, where they're thinking about M&A strategy, they're thinking about eventually maybe capital market strategy, international development. And so in addition to our real estate and venture angle, where we can add value at every stage, that's sort of something additive that we can provide at that stage. In terms of round sizes, it's interesting, we saw in the presentation earlier that the round sizes are getting bigger. So 2 years ago, I would say when we invest in a Series C stage, there are probably 30 million rounds, and we're investing 15 to 20 million. Now we're seeing Series C rounds with 50 million, sometimes even higher. So sometimes I think of it less in terms of Series B, C, or D, and more in terms of just the round size than we would typically play. So our check sizes are typically around 15 to 30, I would say. We like to be half of the round when we invest, mainly, especially in PropTech, I would say. It's a growing but still a nascent industry where we like to have both insider support as well as strategics around the table. And we think having strategics, potential customers to round out the round is really beneficial, both for us as well as the company. So that's sort of a little bit on where we play. In terms of what we look for in the company, we are really looking at companies that's breaking out to become the market leaders. And fortunately, we're seeing in this space a lot more companies hitting their stride. And we think in 2021 and going forward, there will be plenty more to come.
Great. Zach, talk to us about MetaProp. What's the focus? You mentioned, I think 130 companies. So where do you get involved? What do you look for?
Sure. So by contrast, compared to PSP, we've really, built our bread and butter around early stage PropTech investing. And so you think of us as primarily institutional seed and Series A is the rounds in which we get involved. The full continuum is going to be, we'll get involved in pre-seed sometimes for the right team and the right idea. We'll invest all the way through what's now the continuum of seed, as many firms are raising multiple seed rounds, sort of become the new normal, and then into Series A as well. Nuts and bolts of check writing. Our checks can flex from below $500,000 to right around $5 million as a mark. So we have pretty healthy amount of flexibility in that range. We lead, we co-lead. We're happy to be a sort of large syndicate member, and we've always built our practice to be very collaborative with other investors. So we have a lot of co-investor relationships and are happily co-invested with the folks on this call. Some actually quite recently. That's sort of the nuts and bolts of what we do. As you look around different investment firms within the PropTech space, some folks will take a subsegment. It's just construction tech, maybe just multifamily related tech. We've always been very broad, and so we look for tech that's going to touch each and every property type across the real estate spectrum, including longer tail categories, think industrial, parking, senior housing, student housing, and the full functional value chain within real estate. So we want to find tech that's going to be involved in the initial conceptualization, entitlement, and financing of projects, the entire construction development process, brokerage, property, facilities management, et cetera, the whole range. And the other side of our business, just for reference, is made up of the real estate industry itself as sort of our foundational investor layer. And they represent about 20 billion square feet at this point of diversified real estate holdings globally around the globe. And so we act in a lot of ways as a filter and a router for industry to find the most promising and relevant new technologies for their firms. And we can be particularly helpful with early customer and partner introductions and deployment. And then as we go on with continuing to shine a spotlight, attract specific talent, et cetera.
Excellent. Excellent. Lynette, if you could talk to us about Reach.
Yeah, absolutely. So I would say that what Reach does is straddles sort of a little bit of what both Monet and Zach have described from their particular points of the world. But really what Reach is a feeder arm into Second Century Ventures. So in terms of the actual investment thesis, that's more on the Second Century side, but certainly we're looking for companies that help meet those objectives in terms of Second Century Ventures, really focusing on technology that supports their membership. So brings efficiency into that real estate transaction or reduces friction throughout that transaction. So certainly we're looking for companies that approach the market from that perspective. Generally similar to, I guess, what Zach and the Metaprop folks do, we're looking for sort of late institutional seed, in some instances, even pre-seed, depending on the solution and how we feel it fits into that thesis of bringing efficiency into that transaction, right through to either Series A or B. So because we're a scale program, we're really more focused on ensuring that we can leverage our network and our resources to help companies scale from wherever they are today to wherever that next level is. In particular, with the expansion of the Reach program now globally into markets like Australia and the UK, global expansion is also very much on the radar for some of our companies. So as an example, we've had some companies successfully come through the Reach program in the US over the last number of years, who are really looking to now scale into those international markets. And so we can facilitate that for them as well. And so size of the company is in some instances less important. In terms of who we're looking at from a Reach Canada perspective, certainly on the North American landscape, we're looking for those companies similar to what Chris pointed out in his presentation around digitization, really accelerating some of those trends in the real estate ecosystem with virtual showings, et cetera. But we're seeing a couple of other trends come on board as well. So home ownership as a service. And I think COVID has really kind of put some of those types of solutions on the radar as well, where we're really reimagining what go back to work is going to look like and what go back to work versus living from home or working from home will look like as well. So, we're starting to see more of those solutions come to the table as well, in addition to a lot more of those sort of end-to-end concierge type solutions. So we're looking at those types of companies that are really trying to bridge some of those gaps. In some instances, solving small aspects of the larger picture and really looking as a strategic objective to become integrated into some larger entity. Again, all of those people in the top right-hand corner of Chris's slide that have really gone public and have raised large capital over the last number of years. So that's sort of where we're focusing on from a Reach perspective, is really facilitating that funnel to bring efficiency to the market, reduce friction in the transaction.
Excellent. So we're talking about 2021 forecast. I would be absolutely remiss if I didn't start with the pandemic, right? That we're all still in the middle of. And Chris, so you in your presentation you talked about VC investment dollars were down from 2020 from 2019. Same M&A deals. But we've got two interesting things here. Like I think anytime you see a major impact event like we had with the pandemic or are still in with the pandemic, you have acceleration of a trend like digital transformation. But we also have a lot of new problems that weren't getting attention that people are going to start focusing on. So take that, combine that with this finance trend with the SPAC. What do you think we're going to see? Are we going to see another down year in investments and flat M&A activity? Are we going to see more acquisitions now because we've got SPACs and companies are going to be, have dollars to invest? I mean, where do you think this is going to, what is it going to look like this year?
Yeah, and I mean, I want to be careful. I mean, obviously the data tells us 2020 was a down year over 2019, but you've got to put things in a broader historical perspective. I think, in my view, I mean, 7.3 billion into this category, if you look back over the last 4 or 5 years, is just a tremendous amount of money. 19 was a particularly strong year for capital raises. As you recall, I think Open Door had a couple of big rounds in 2019. And so there were just some real not outliers, but just some real large slugs that came in 19 that caused 2020 to look a little bit down. I don't think it's a reflection that people should read too much into in terms of excitement or attractiveness of the category. But in terms of M&A, when you look back in the first half of the year, that was a very slow time for M&A activity in the market. It was very difficult for, think of the strategic board conversations that were happening in April and May, kind of right after COVID hit in 2020, where people were sort of trying to figure out what their adjustments were going to be to react to COVID, how they were going to get their thousands of employees more efficient working from home. There were a lot of internal focus areas that people needed to work on in that Q2 2020 time period that led to a decline in M&A activity. We saw a strong acceleration in the back half of 2020, and I think that'll continue into 2021. And so as we think about, you're right, solving some new problems, and you're seeing companies like Notarize, remote online notarization, kind of trends blend on the digital mortgage side, the direct to mortgage folks like Better and others who are going direct to consumer with their business models now post-COVID, sort of cutting out that middleman or that human interaction requirement. I think there's some new problems being solved. And then on the M&A side, I think these larger strategics, with the cost of capital being what it is, which is effectively zero on the interest rate side, they've got big cash balances that they're going to have to deploy. What better way to do it than to acquire some innovative technology businesses? And so I think that'll continue to lead to healthy M&A activity here in 2021.
Excellent. And so, Zach, really early stage, you said even for the right team, you do like pre-seed. Are you seeing kind of a bubble up of people trying to solve new problems? I mean, did you see kind of going into, everyone in the, the second quarter going into the third quarter, I think was just like in kind of a little bit deer in the headlight shock. What's going on? What do we do? And then I think we saw some freeing up a little bit of like, okay, now like we do have to move forward. What do we do? Are you seeing that in deal flow and the types of deals you're seeing? I mean, what's the impact that you've seen through Metaprop?
Sure. Well, I'd start out by seconding a lot of Chris's commentary. I think that's right on. The headline is net. This is probably an acceleration for the space, right? It doesn't mean everything will look exactly the same. It doesn't mean that opportunity will be distributed evenly. But all in all, it's sort of an acceleration. And I also just don't see it slowing down at all in 2021. You're probably going to get, even more stimulus coming in. It's pushing a lot of the publicly traded stocks to all-time highs, as Chris pointed out. The PropTech public indexes outperform the broader public markets. You have new exit opportunities now coming in through SPACs, which, say what you want to about SPACs, but it's a pretty intriguing exit option and even quicker path to liquidity for a lot of the companies that are now growing up and bubbling up, in the 160 odd companies that have raised a substantial amount of capital now in the space. And that capital going in means the later stage companies have even more to invest in growth and business development. It means that investors are seeing returns and the entire space is being borne out. And at the end, the early stage is always to an extent a bit insulated from what happens at the very early stages, a bit insulated from what happens at the very late stage of the market, but it's certainly influenced by it. And when you see in any growing sector that the exits are coming, capital's being returned, and entrepreneurs and investors alike are making money, it stokes more activity in company formation. So I think actually, if you look at the numbers that I've been seeing, The only segment that has not really grown throughout this has been the seed stage. But we haven't seen that day to day. I mean, we vet 200 plus deals a month at this point at the early stage. I mean, it is a big sort of raw feed coming in. And we track that really religiously. We're very metrics driven. We're at all-time highs. I mean, that is, totally pre-COVID all-time highs. Where we choose to focus is a little bit of a different area. We have shifted as the market shifted to weight a little more heavily towards residential areas, since that's been such a red hot market. Areas that we've always been active in, things like vertical SaaS for industry professionals that have always had the promise of making jobs more efficient, also have the side effect of helping professionals do those jobs, at least in part remotely, and have seen a lot of adoption over the course of the pandemic. The area that's a little more of a mixed bag is if you look at sectors that are really in distress. So think certainly brick and mortar retail, hospitality to an extent, and office is a mixed bag. Those areas are places we're probably not seeing nearly as much compelling incremental activity happening. But we want to make bets. Those bets, though, are going to have a lot to do with how those spaces are transformed, either concepts around what they'll eventually look like or tooling that will help with that transformation. That is, we're looking at it and we're continuing to vet, but that's a little bit more of a, you got to digest, form your point of view about where the market's going, and then make a limited number of bets in that direction.
Yeah. And so Monet, like when we talk about this, like Zach mentioned a couple of times, accelerate, and a lot of the deals he's looking at, I would say, are solving kind of point problems. And then I think where you come in is accelerating that growth, but really then starting to put pieces together, right? So that you have, someone that mentioned earlier, kind of integrated, an integrated transaction. And so have you seen any impact yet in kind of how people are coming to you, what they're looking to do with the investments, how they're looking to focus because of COVID, or is it pretty much been business as usual, just bigger dollars?
Yeah, no, nothing was business as usual, I would say, in 2020. Maybe just to tie a few things together, one of my takeaways that I also had when looking at Chris's slides is, this point has been mentioned a little bit before, but even though overall dollars was slightly down from 2019, but the deal sizes have gotten bigger into specific concentrated bets. And I think what you're seeing is that COVID, much like it's doing in all parts of the economy in our lives, are separating the winners and the losers, because you just start from the customer side, right? Landlords in 2018, 2019, there was a lot of hype around PropTech. There's a lot of excitement, and the economy was good in the sense that they're trying a lot of different solutions. They're trying point solutions that develop into something. They tried point solutions that didn't develop into something. I think I talked to one landlord that was piloting 200 solutions at the same time. So all those companies are going to have that major landlord's logo on their pitch deck, but obviously not, the majority of them are not going to have them as an enduring customer. And so all of a sudden with COVID, only the companies that's truly solving pain points are continuing. But if they're able to break out and show that they're solving true pain points, all of a sudden they are attracting more capital, more customers. It's a virtuous cycle that way. And so from our perspective, what we've seen is that it's really a tale of two cities. The larger rounds that we've seen, who are the winners, all of us very quickly, we've seen that we're not the only ones that identify them as a winner. So even though we're in 2020 in an odd environment, the deals have been more competitive than ever. And then you have companies that seemingly look like they're in the same space, but are coming to investors with a third of the valuation that they raised 6 months ago, and no one is touching them, because it's more apparent now who is going to get traction and who is not going to get traction. And so we think that trend is going to continue in 2021 as PropTech matures and customers and investors know the type of solutions that's sticky and know what's not. And to Zach's point earlier on companies being started, I'm not surprised that there's no shortage of seed stage companies forming, because I think if you get it right, this is actually a really good time to form a company. Because if you think about it, you have arguably cheaper talent that's more accessible. You have cheaper rent. Sometimes you don't even need to pay rent during this initial few months. And your customers are going to be straight shooters with you in terms of what they're looking for and what they're not. You're not going to burn a lot of time, energy on pilot solutions that they're not going to move forward with just because they want to use you as R&D for their own function, right? There's less patience for that. There's less resources and capital for that. And so you can quickly, maybe in your early couple of years when you don't have the revenue pressure yet, to really find the right product mix in a capital efficient way.
Oh, yeah. I mean, it's a really interesting thesis there, right? I mean, it's accelerating the separation of the winners from the losers. Yeah, great perspective. Lynette, let's shift gears a little bit. Let's put on our rose-colored glasses. Let's assume we get more vaccines. The vaccines that are out there get into more people, and let's just say we're kind of through this at the end of the year. For the most part, right? This is going to be around for a while, unfortunately. What's going to change versus stay the same? Because if you look at the real estate transaction process, right? Closings in the heat of the pandemic were literally, I refinanced the house and people drive up in 2 cars, and I was praying it wasn't raining out, and they're like handing window documents back and forth through the window. And there was a big push we've seen on remote notarization, right? I mean, a lot of focus on that this past year. What has changed that's going to stick around, and what are we going to we're just going to go back and do it the old way now?
Yeah, I mean, that really does require, I think, a little bit of crystal ball gazing. But I think one thing for certain, and this is really just to tail on to Mome's comments around, accelerating the trends around the winners and losers. I think that's what we're seeing, Glenn, is COVID really sort of illuminated those areas that we were resisting innovating around, right? So a lot of technology was being invested in. It's been around for a while, and really they took off. It took off during COVID, so during 2020. And interestingly, I'm just thinking about our portfolio of 8 companies that we have in, and to a penny, to a number, every one of them that was generating revenue sort of pre-COVID, they kind of went through the roof, or else were provided a massive opportunity to pivot and begin generating revenue where they weren't before. And so the opportunity, I think, is massive. And I think one of the things we're going to see is I think we have a bit of a lag. So COVID allowed trends that were already in market to really take off. And what we're seeing, and maybe Zach, you're seeing this too in some of your early stage investments, we're seeing some folks trying to solve problems that have kind of always been there, and they're now taking advantage of that acceleration and jumping on board now. But I think you already have incumbents in the market that are ahead of them, right? And so I think we're going to see a little bit of this this kind of cat and mouse game in terms of, is the new tech going to supersede kind of what was already there and just waiting for the space? And so things around certainly showings and virtual home tours, that type of thing, it's that sort of high touch, low value stuff that I think we're going to see that trend continue. People are now used to the fact that, I don't have to really be there to do all of those low value, low quality tasks. I can automate a lot of that, right? From a real estate practitioner or sort of inside that transaction point of view. Notarization is one of those things, right? We've seen some regulatory hurdles get moved, which makes that now easier and more innovation able or capable to flow into that space. I think some of the other things we're going to see, though, again, are and Chris pointed this out in his presentation, things around amenities and home services. People are getting used to the fact that I don't have to go out to get some of this stuff. I can take advantage of some of these services right in my place of living. And so I think those are some of the trends that are going to stick around and continue to accelerate. And I think we're going to see some of those asset owners really supporting that because it's adding value to their asset class that I think is maybe a little bit up in the air right now in terms of how they're going to continue to maximize value on a lot of commercial or mixed use property. So, I think those are some of the high level trends. I think we continue to see an acceleration of sort of those things that have been hanging in the wings for a while. But we're also going to see a little bit of an acceleration around some of those, more efficiency in areas that were really just low value tasks that can now be automated or offloaded onto other platforms.
So Zach, we've only got about 2-3 minutes here, but what would you say about that? I mean, do you agree with Lynette just covered, or are you seeing something different here?
No, broadly speaking, I'd agree with a lot of that. I mean, I think the general refrain across tech as a whole is, and it's sort of off-site at this point, but the idea that, 5 years of innovation adoption was pulled forward into about 5 weeks at the start of the pandemic, something along those lines is certainly true in real estate. A lot of those professional tasks don't go back to the way they used to be. The consumer experience about their interaction with real estate, and particularly historically friction-filled processes around real estate, the expectations totally changed, as at many other points in their life. I think that the one area that piqued my interest that Lynette was talking about was the monetization. We've sort of noticed there was a real proliferation of companies pre-COVID, particularly for areas like multifamily and to an extent as well in office, that were really geared towards greater monetization. We've seen a real prioritization around cost cutting and things with a really tangible ROI. A lot of times it's difficult for the monetization plays, which deal with boosting top line often, to quantify their ROI quite as much as somebody who's focused on cutting OpEx. Those that are able to really demonstrably prove retention or speak to amenities that meet the moment, things like affordability focused amenities, things like that, I think are really well positioned. If you've gone through this and you haven't been able to show a really clear ROI proposition across the board, I think you're really going to suffer. So broadly speaking, I'd second everything Lynette was saying.
Okay. Well, we only have 2 minutes here, and I want to be respectful of people's time because we scheduled this for an hour. And that's the bad thing about these meetups is you can't do the let's take it from this room into the bar and let's continue the conversation. But I want to thank everyone for their time. And at this point, I'll turn it back over to Dan and to Dave.
Thanks, Glenn. I'd like to echo that. I'd also like to thank our panelists today and everyone for joining us. We really hope you enjoyed it. I'd like to take just one last opportunity here with our minute left to remind you of 2 exciting events that we have coming up. First is this March, we'll be having one of my favorite folks from AWS, a VP and a chief evangelist will be joining us to talk about what new tools from AWS can be a differentiator for your PropTech startup. So if you'd like to learn more about that, just register with the same group where you got the invitation today. That's meetup.com/PropTech. And secondly, if you're a VC, an entrepreneur, or a tech-savvy realtor or practitioner, make sure to visit ioi.realtor to learn more about our 2021 Innovation Opportunity and Investment Summit, where there'll be many more fantastic conversations like the one we just witnessed. So in closing, if you'd like to suggest any speakers, topics, or just curious to stay up to date with the emerging technology research that's being done by NAR, feel free to reach out to Dan and I on LinkedIn, and we're always happy to chat. So thanks again, everybody. Have a great day. Bye-bye.